restarting this. It's been a while.
What was that? I didn't hear that.
I said thanks for restarting the chat. It's been a while.
Yeah.
It's been a while since we did this. So it's good to have this back online.
Yeah, we've had quite a few new people come in over the last couple of weeks, so I thought I'd try it again.
Good.
So I guess we can go ahead and kick it off. If I know you had some questions.
What up, Randy?
What's up, Dave, man?
Well, I guess I gotta get on my camera.
Looks like a bunch of folks joining. Good.
So anyone who wants to go, just speak up.
I can go. I'm on call, so I might have to leave in between.
Okay.
So, couple of questions. Couple of things I've been struggling with is that I have two different portfolios. One is my dividend portfolio, and the options is options portfolio. The options portfolio is separate. I keep them separate, and I've been running some covered calls to get some extra income from my dividend portfolio. But I really would like to keep these. The problem is inauguration, or vaccines come out, and then the stocks kind of shoot up. And I'm doing way OTM out of the money, like 90% for the stocks that I'd like to keep. The problem is a lot of them are stable stocks, and the IV, when I'm actually selling the covered calls on those stocks, the IV is not that high, so maybe 30%, between 30-35, and then some good positive news comes in, and then the IV shoots up. And even though I'm way out of the money, I'm getting very close to having those stocks called away. So my question then is a little bit about rolling. Randy, when you roll, when do you start thinking about rolling? I usually, let me give you the context. I usually sell about 30 to 45 days out. I know you do less than that, but do you start thinking about rolling the week the option is going to expire, or you are,
Well, it's going to be.
It's early, it's too close. It's just going beyond here.
It's going to be different for different people, but if you're wanting to keep the stock, you're at risk of having it called away from you anytime it's in the money. So I would roll it then if you really want to keep it. Now, you're gonna pay more in time premium and I can't say the word, intrinsic value, because you're not waiting till the end of it. But that's just what you have to do if you want to make sure you keep the stock.
Problem that I faced is kind of a little variation of this. For example, I have a good amount of Bristol Myers, BMY, and then I got into this trouble. Like the price was shooting up, and I wanted to keep it, even though there was a lot of intrinsic value in there. So the stock kind of went back down again, and I got from negative to I got to like 10% profit, and then I sell it, just so that I could keep at least not take a loss. But then the stock keeps going down. So now I feel like in these situations I turn from a theta player to a price thing, and that's not what I want to do. And that's a losing game. You don't know which way the prices are going to go. And sometimes I'll take a lot, it will just keep going. Sometimes it just shoots up and then goes all the way down.
Yeah, I don't know what to tell you. I mean, if you throw calls on there, you're at the mercy of them having called away. If it's stocks that you absolutely don't want called away, don't put a covered call out there.
But
I think
is this
that's
a
what I'm
long-term
looking
hold?
into.
I thought you said this was a dividend portfolio. Is this a long-term hold?
Yeah, long-term hold.
Then why are you worried about the price of the stock?
Well, I've been running some covered calls for some extra income. I've been
Right, I do the
playing
same
around
thing.
with some
Okay.
stocks.
So why do you care about the stock price though, if this is a long-term hold?
Right, so my strike price, it's getting close and going beyond this. The price, the market price is going beyond my strike price,
Yeah.
even though I'm going way out of the money. That's
I mean, how far are you going out of the money?
90%.
Okay, I mean that's going to happen every once in a while. I mean, the problem is you're just doing 45 DTEs, which is going to be tough. I mean, anything can happen in that amount of time, right? I mean, I get it. You're trying to be more, passive with it, but it's just with a 45 DTE. I mean, shit, the thing can freaking move, to the moon and back, right? These are long-term holds. I mean, I do the best I can do with judging. I look at a chart, right, and see how far the 52-week high was. I go back on a 5-year chart or whatever, and then I try to price it above there. Or if the stock has been low for the last 52 weeks or whatever, I try to price it where there was a gap, or I try to price it, right around the 52-week high or just slightly above it. I mean, I could be wrong too, right? But I'm also doing shorter DTE, so it gives me a little bit more leeway. But I mean, all my stocks are long-term holds as well. So, have you thought about doing a shorter DTE?
I've just been playing around with it. I think I've just transferred my thought process from doing cash secured puts to covered calls. I should have probably looked at. So I like to do. I figured out that CSPs is better, like 30 DTs, and I kind of use the same thought process. But you're right. Maybe the covered calls, I just need to do. When I'm doing covered calls, I probably need to do shorter DTs. Unlike cash secured
with the
puts.
covered calls, I mean, the way I look at it is it's just kind of like extra money. So I'm not real aggressive with those. I'm usually around the 5% probably of the money.
Okay.
But I still, always leverage a chart. I don't know if you use a chart at all. If you use basic, technical analysis, that's definitely going to help put the odds in your favor. But, I mean, I still, I mean, look at my VYM, for example. That's been in the money. It's still got 30 days left on it. But, I mean, yeah, you're going to run into it every once in a while. Just roll it if you don't want to take the capital gain.
Yeah, that's the other piece. I don't want to take capital gains. It's different in the IRA. Then I don't care. I'll wait for things to settle down. If I lose it, it's fine.
Yeah, just roll it. Just roll it. And I mean, as far as what Randy was saying, I wait till the end to roll mine. That's just me, though.
Okay. And how far out do you go for covered calls?
Depends on what it is. I typically anywhere from 15 to 30 days. And the 30 days is just because that ETF only has 30 days, only has monthlies.
Yeah, yeah. You know, I have a whole bunch of VTIs, which is the SPY, the ETF for Vanguard, and I looked at the 5200 day, and and I set, when I started it was like $194, and I looked, did the technical analysis and never touched 200, and Biden inauguration comes in and boom, it's
That's just the
it's
nature
never
of the
been there.
game. Yeah,
It's
I mean,
just
my
never been
BYN,
there.
for example, I did a 60-day DT on it because the month prior didn't give me enough variation in the strikes, so I went out 60 days, and literally after about 20 days, it was already in the money. So, it made like a 7% move when it typically only makes about a 9% move in a year. So, I mean, how does it do it in 20 days? Yeah, I mean, you're going to run into that every once in a while, but it's just, the way I look at it is, it's just extra money, you know what I mean? So, I mean, do the best you can do. Try to gauge where it's going to go. And, if you go with shorter DTEs, it's less of an issue, but
Yeah, I might have to try that. Okay. The next question was, and this is really stupid, but Randy and Hidden, what are the how many technical indicators do you use and just run your day trades? Do you just look at? I don't like using a whole bunch of stuff. I think it just clouds it.
0. I look at it. I look at a chart mostly, and I look at the yearly chart, and say where's it not going, and then I'll go to toss and I'll pick out around 68% of probability out of the money, and I'll just kind of pick around there. I've been doing that same stick for 2 years. It works pretty well.
I think it's going to depend on the person. If you don't know TA at all, if you've never been a day trader, then just, learn a basic chart, right? I mean, I came from a day trading background, so I have a little more indicators on my chart. I have Ikuchimoku Cloud, which, I think that Randy just figured out what that was. But really, honestly, a chart with basic 200 period moving average, 50 and 20 on there, and looking at like a daily chart is going to get you like 90% there. You don't even need, you don't need stochastics, you don't need MACD, you don't need all that crap because you don't care necessarily what's going to flop. I mean, I'm trying to think if there's anything else that I would use. Those basic things right there will get you 90% there.
Okay, so 200, 50, and 20. So short, intermediate, and long. Okay. Yeah, I was looking at different sites.
Sorry.
And it also depends on what strategy you're using. I mean, if we're talking about what Randy and I are doing during the day, we're selling naked calls, we're doing stringles, we're doing, naked puts, then that's all I'm doing. I'm looking at a daily chart with the 200, 50, 50, and the 20 on there. That's pretty much it.
Okay. All I've been doing so far is cash secured puts and covered calls. That's all I do. And almost 90% is cash secured puts. I have a full-time job. I cannot look at stuff. I work in the hospital. So I have to.
I have a full-time job too. I'm just laying in bed doing it.
Yeah, I have to go back to work in the middle of the night, 2 a.m.
And
yeah.
And if you do it like on ETFs, I've started doing it with all the ARKs, like the ARK K. That takes a little bit of volatility out, and you can. To me, they're a little smoother.
That's a good point. I was trying to, Randy, I want to ask you this. I saw that you started doing ARK and ARK-G, and I have Vanguard Roth IRAs, and I just got approved by Vanguard for options, and I tried ARK. I just couldn't get fills. The ask and bid, there is so much of a gap, and it's the most horrible website ever. This devised by mankind, Vanguard. After you've done TVM, Thinkorswim or whatever, it's just terrible.
Yeah.
And on the top of it, there's such a range in the bid and ask. I
Yeah.
tried the whole day today to get a fill an hour. Just couldn't get anything.
You couldn't even get on the ask?
No, I couldn't.
Is this
Yeah.
RK?
Okay. I didn't go all the way down though. I started with mid and then I was slowly going down. So I don't think I quite got down to ask yet.
Yeah, I closed an RK today, and I started with a mid. And I mean, it's already 80% profit at this point, but I had to literally take it right at the bought to close, so I actually had to go to the ask. But yeah, I mean, literally, I had to go all the way up to ask to get it.
So I wonder if it's a Vanguard. It's a problem.
Yeah, I mean, I don't know. Do they actually have a fat client, or is it all on the web?
Oh, it's just on the web. Yeah. There's no. It's terrible.
So it could be
It's on the web.
delayed.
It's only
Okay.
when you go to market.
What about a market order?
Yeah, I didn't try it yet. Maybe. I just started doing it today.
Yeah, because like on the ARCs, I went out like 1 month, 3 months, and 6 months. So I mean, I just took them pretty much at the ask because I mean it's so far out there that I'm not gonna dick around for $1 or whatever that spread is. Just take it and go.
More than a buck.
Well, I think yeah, you're right. I was dicking around and it was terrible.
Yeah, I noticed that today too. It's like one of those ones you just let expire and not even close it because it's like one of those ones that cost 10 cents to close it.
Okay. I think those are the questions that I had to begin with. I'll let others to ask the question before I ask some more.
I have a quick question. Can you guys hear me okay?
Yeah, we hear you.
I don't know what your box is talking, but
Invest to retire.
Yeah.
Hollywood Square.
So I was curious, when you guys hear people just starting out with trading options, would you recommend that people that are novices start trading or putting in orders later in the day to get past that initial volatility in the market?
I would say even for experienced ones. that first 15 minutes is pretty volatile.
So what I'm finding is when I started trying to do paper trading, and I've done like a month of solid paper trading on TDA, I was able to, on the paper account make, somewhere around $1,000 just in that first half an hour to an hour. But as soon as I got to a real account and, I got only approved for the advanced level options trading on Interactive Brokers, but that's where my problem started. My fills are terrible, at least from a execution perspective, even on high volume traded tickers. So
yeah, I would call Interactive.
Randy, I was talking to Investor Retire about this. On my paper account, on my maybe account, when I'm doing testing for my scripts and stuff, the fills are really bad for some reason on the paper account. I don't know why, but they just are. It doesn't mimic what I see in the actual real live account though.
right, I'm talking about the real account that I have on IB. Is where I get really slow fills as well. Sometimes I'll put in even 5, 10, 20 cents below the mid price, and it still takes 10, 15, 20 minutes to fill.
What stock is this? Because I've never experienced that.
I've done Amazon, I've done Tesla, and Alesco.
No, definitely not those.
Never happened. Yeah. Sometimes Robinhood sucked big time. It would get rejected.
You actually have live data feed?
Yeah.
You're subscribed to?
Yeah, in fact, that's why I upgraded to a pro account, thinking that it might have something to do with that. And well, that in fact that you couldn't actually get one of the data feeds, the U.S. equities and options add-on, unless you go to a pro account. That's another thing I learned.
I used a lot for a long time, and I had all my feeds, so I would call interactive brokers and just talk to them.
Okay.
Because, yeah, I mean, it's lightning fast for me.
Interesting. Because I'm starting to think I'm just way too impatient. But it sounds like you guys are not
No,
experienced.
yeah, I mean, and mobile is even faster. I mean, by the time I slide the order button, I mean, it's executed before I even hear the ding.
That's the experience that I get with TDA. Unfortunately, they didn't approve me for the level of trading yet, so I'm gonna spend probably a month or two just doing a bunch of iron condors to get a whole bunch of records to show up on my account and use that as an excuse.
They never approved me. I did try, and I actually had a rep call me several times, and we tried to run it up through management, and they never would give me the approvals to do what I wanted to do.
Is that when you were just starting out, or even after you had...
After about a year.
Oh, wow.
And I even showed them my interactive broker account with, over $100,000 in it at the time, and they still wouldn't approve it.
Okay, well, you're not making it look very good for my future on TDA then.
Well,
You gotta rely on that questionnaire, Randy.
well, I actually probably was fudging it a little bit back then, but
You're already fudging it to the walls.
but I wanted to do the naked puts and calls, and they would never give that to me.
How did you guys find Tastyworks for those that used it?
That's a good question. I came across Tastyworks in 2015. So Karen the Super Trader, look her up. I mean, technically they said she violated some SEC rule, but that's where I learned a lot of stuff from her.
I found it.
From my execution perspective, that's just what I'm curious. Is it similar in terms of getting fills?
Nah, it feels pretty quick.
Okay.
Yeah, I used it for a short time. I like IB better.
Well, here's another question. I know that, Randy, you started, you mentioned a couple of times that you're using strangles. When you actually do that, do you execute them pretty quickly, one after the another, or do you typically go into the puts or the calls first?
Yeah, I may do them as much as a couple of days apart. I just play both sides. I mean, it ends up being a strangle, but I don't necessarily put it on as a strangle.
Gotcha. Okay. Because that's another thing. I actually was just in the Atlas voice chat that they had going, and one of the things that they were talking about is how do you actually scale in and scale out. It was interesting to find out because I always, for some reason, started thinking that you want to cover both sides to avoid, risking getting into the money. But it sounds like a lot of people actually that have more experience tend to look at where the actual ticker is going and then put the other side on to protect them.
I don't do that. Ideally, that would be the great thing to do. The stock goes up, sell a call, and then stock goes down, sell a put. But most likely, it doesn't happen to me. The market tends to do the opposite of what I want it to do. So I put them on at the same time, and like Amazon's a good example. Put them on right at the same time. That way, if the market goes down, I can capture the other side. Plus, I mean, it's free as far as buying power is concerned. Pretty much free.
For me, as soon as I put in a trade, it's guaranteed the market just waits for me to go the other way. I just ignore it and walk away.
I got to rework what I called you myself.
So one thing I found useful, I was trying this out for a couple of days already, is the volume profile that they have as a study in TDA or in the Thinkorswim platform. It gives you an interesting view if you actually do, on a daily basis. You can actually see where the price might actually go to. It's not a guarantee of any kind, but from what I've seen so far, it's actually been sticking fairly close to that, what they call POC. I forget what it stands for, but that's like the highest point of volume during that particular day. So something to look at if people are interested.
So the VWAP or whatever?
No, so basically what they do is they plot a line. It's similar to a concept of a VWAP, but basically they capture the highest point of volume throughout the day, and it can shift. So as it actually moved up in price or down in price, that POC line can actually change, go up or down as well. But then what typically happens, the ticker could actually it uses it almost as a magnet. It will gravitate towards it, and if it tries to go away from it, it either forms a new POC or it will fall back down to the one that was established initially.
It's a technical indicator.
Right.
Yeah, I mean, just for anybody on this call, technical indicators, none of them are foolproof. A lot of them are lagging as well. Most of them are lagging. Ichimoku Cloud is actually a forward-looking one, but just because you don't know a technical indicator doesn't mean that's the reason why you're losing out on your trade, right? And you watch a video on somebody talk about a technical indicator and they should be a millionaire, right? Because it's the foolproof way of trading. That's bullshit. So just, learn one or two. And like we were talking about earlier, just to learn a basic chart, learn the moving averages, maybe pick up one technical indicator or whatever you're comfortable with. But just none of them are foolproof, right?
And as far as options, I mean, sometimes you got to just take your time out, because your best friend's theta. That's way better than any technical indicator. You just got to let that stuff sit out there and decay.
Yeah, that's why when we get into a trade, it's like we had planned on taking just 7 days, but just because it goes up 50%, we can be right, we can be wrong, doesn't matter. We're right when we're wrong as well, right? Because we can just wait it out. 7 days, boom, collect our money, start the next trade.
I think most of us end up working the price action rather than theta,
Not everybody, I think you were talking about earlier, not all of us are sitting at a computer. I am. I'm sitting on there all day. So I'm not necessarily day trading. I don't get into a trade trying to day trade it. Mm-hmm. That's not my goal. My goal is to make money. But, I do find myself opening a trade, closing it the same day, and sometimes the same position twice in the same day. But that's not my ultimate goal.
Yeah, if I log in the next day and I've already taken 25%, I'm happy to take. I'll do that every day. Even though I don't care what's it's going at the end of the term, I'll take that.
Does anybody on this live stream or whatever this is called been assigned early?
I have. Yeah.
What stock was it?
It was Apple. I was running right when I started. 5 months ago, I was doing credit spreads, debit spreads, and I ended up. I think Apple had gone up in August, almost up to where it's now. I think 132 or something like that, and I ran a debit spread right at that time, and it fell down to 118. So I went deep IT and